Hi, it's Andrea Unger here, and welcome to this week's Trading Thought. One of the most common uses for optimization is to find the best value or best group of values for a trading strategy. But is this approach only giving us part of the picture? Are there other uses for optimization that we can leverage to create better trading strategies? Well, today we're going to have a quick chat with World Cup trading champion Andrea Unger. Andrea is the only trader to ever win the competition 3 years in a row. And he has a slightly different view on optimization, which we touched upon in a previous podcast episode with him. I think it may have been episode 16, actually. But today we're going to dig into that a little bit more. So let's hear Andrea's thoughts on optimization. Hi, Andrea. Thanks for joining us today.
Hi, Andrew. Thanks for inviting me again.
I just wanted to have a quick chat to you today about optimization because in a previous podcast episode we were discussing this and your approach to optimization or the way you use it is a little bit different to other traders where traders like to try and find the best parameters using optimization. But how do you actually use optimization on the markets?
Well, I believe the word itself is wrong. Optimization, that leads to different interpretation, trying to find the best to optimize. I don't want to optimize. I'm not interested in the very best outcome because normally that very best outcome is what has been and not what will be. I'm interested in what I have to expect for the future as every trader. So the opportunity that the software gives to us to go through different values of parameters of inputs is also a good way to explore what the market does under different conditions, such as different times of the day or different levels or different gaps, all values that you can increase and decrease by different steps and then see if there is a different answer from the market. Maybe some example could help, obviously.
Yeah, sure.
Let's say I want to enter the market at a breakout somewhere above the high of yesterday, let's say, okay? So I add a value to the high of yesterday, a number of points, and I multiply this small range by a multiplier, which I can optimize. So I can go from 0, for example, to 5, step point 1, and I see if the level where I enter, the position of this level actually plays a role in the entry itself and in the trade that was born there. So I can understand if I enter simply at the high of yesterday or if I wait and enter a little bit more or more above or even a lot more above, if that makes a difference. Sometimes, obviously, we always want to enter for a long trade at the smallest price possible. This is clear because we want to buy the cheapest possible. But not always this is a good choice. Sometimes we have to wait for the market to really confirm the will to go in that direction. So there might be as a distance from the high where we have sort of a certification from the market to be bullish, what we're looking for. And with the optimization, I can look at and say, look, the performance with my multiplier set to 0 is fine. So it's a good entry. But if it's set from, let's say, 0.7 to 1.3, performance gets even better. And then above that, we lose performance, but maybe we lose performance simply because we have a smaller number of entries, simply because we don't reach that level in the period of time where we set the entry.
Yeah.
But the range of values, if it's stable, I mean, we have to be sure that we got the same answer throughout the different values, because if we get just a peak, it's nonsense, it's a coincidence. But if we get a common answer on different levels, and we see a consistency of the results inside a certain interval of levels, then we understand that the answer from the market under those conditions is more positive, let's say, than under other conditions. And we understand that the market has a different way to react depending on where we enter. Obviously, we are talking about swing trading and short to medium term trading. We are not talking about long-term trading where this sort of example does not apply because it's ridiculous if I stay in the market for 3 months to think that a couple of pips can make a difference. Yes.
Yeah. So you're really talking about there is using this optimization process to understand the underlying behavior of the market. So by looking at the markets from that kind of an angle, how do you treat the parameter ranges and the steps there if you're kind of trying to understand the underlying concepts rather than find the optimal value?
Well, actually, I try to understand if there is something there. I mean, doing so, I understand, first of all, if there is stability of my entry. Because if I just enter, going back to the example I just made, if just enter the breakout of a high and then above the high, any distance I enter, it's a disaster. I understand that entry is not a good one. I mean, there is something that doesn't work. The positive results I got were just a pure coincidence with the first example. But if I see something that consistently has a certain kind of behavior, changing the parameters, I can find a stability zone to use. Also, another example, obviously on intraday trading, breakout entries or also limit entries, pullback entries, I mean, just talking about breakout as an example, entries in different times of the day play a different role. We know that normally we have to wait for a while to get, after the open of the market, to place entries just because we want the market to exhaust the initial moves and things like that, all things that we have read about. But really, there are different times of a day where an entry is more effective than other times. And you can optimize the time window, not really to find the optimum, but to understand in what period of the day the entries actually don't work the way you believe. For example, a breakout entry during the lunch pause is not always the best way. I'm talking about the DAX future, which is very sensible to this, but also other markets show the same behavior. So there are periods where there is no real reason to enter, or also after a certain time of the day, simply because there is not enough room to develop for the trade or things like that. But you can find out, you optimize and you look where the benefits, the edge you have from a certain setup get lost or get weaker just because you don't have the same outcome.
So it sounds like this technique is one of the key aspects of how you develop trading strategies. I mean, I know that you teach some of this stuff in Skilled Academy, right?
I do, obviously, yes, because this is my approach. Not only the optimization, this is clear, but to study the market, try to understand the identity of the market. And the identity is studying what the market does in different moments and based on different reactions. Let's say you get up in the morning and you have an argument with your wife. Your day may change. So I know that every time you have an argument with your wife, I expect a different outcome from Andrew's Wanscott. Okay? The same is in the market. If there is some turbulence in a certain moment, and turbulence can be measured in a spike move or things like that, then you have it. And this is all my approach. I study as much as possible I can from the market to understand action reaction. And obviously I do teach this because this is what I do. I normally do, and I try to do in every market. Skilled Academy is just an example. I mean, Andrew, you have been to my trading masterclass last year in New York, right?
Yeah.
Yeah, and you saw actually how I did it.
Yes.
There were some examples because obviously in 4 days we cannot cover all my knowledge, hopefully, and it's always what I do. What I try to do is to stimulate the curiosity of my students to go the same way or even further.
Well, I have to admit, actually, that that was a fantastic workshop, and it was really great to see the way that you work. And I actually stole quite a lot of the framework that you use for my own because I thought that's a lot better than the way I do it. But yeah, that was a fantastic workshop because we got to see how you work, and there was also Kevin Davey and Tim Ray and Michael Cook as well. So it was an incredible event to get that kind of exposure and in a small group in such a few days. And I understand you've got one coming up later this year as well. So do you want to mention that quickly while we're talking about it?
Oh, if I can, yes, of course.
Yeah, sure.
Yes, we are doing another one. We had planned that as a single, unique event actually, but we had a waiting list actually of people wanting and willing to participate. So you were a lucky one, so that you found your spot. Yeah. And we also saw that we, with the four of us, learned a lot from that occasion. So we decided to do that once again. There will be obviously some differences, some smaller differences on some parts of it. And we are meeting in New York next May. The trading masterclass is the same name, the same structure. Me, Kevin Davey, Michael Cook, and Tim Maria, all traders I deeply respect, because they are very, 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 very good, all of them. And I'm excited of that, because it's always nice to get sort of this kind of reunions. You know, you meet people doing the same job of yours in a different way, completely different way. You have different experience, but at the end of the day, it's always the same thing. I mean, you have pain when you lose, you are happy when you win, but you are never too happy, because you know it doesn't last forever. And you are not even too sad when you lose, because you know it doesn't last forever. Hopefully, hopefully.
Yeah, that was an incredible event. So what I might do is I'll see if I can get a link for that, and we'll share it with everybody, because that was really one of the highlights for me, is to be able to attend that, and I learned so much. And
yes, the funny part, if you remember, it was in New York, but we got people from all around the world. Yeah. Actually, US people were the minority. So we had people from New Zealand, from Australia, of course, from Hong Kong, Taiwan, from Argentina. I mean, people, Italy, Switzerland, were coming from all over the world. That was the most exciting part.
Yeah, it was a great group of people as well. So I'll post a link up to that on the show notes page, and I recommend everyone go and have a look at that. And if you can attend, it'll be well worth it, because it may be the last one, right? It could just be this could be it. So you don't want to miss it.
Well, I can't tell you now what comes next, because the plans were to hold one last year, and that's it. Now, because of the demand, we are replicating, because we enjoyed ourselves. If this is the last, probably yes, but I can't tell you, because I can't swear about it.
Yep, absolutely. So there you go. All right, well, thank you very much, Andrea, for having a quick chat to us about optimization, and I wish you all the best.
Thanks to you, Andrew, and I hope to be here again in the future.
Yeah, cheers. Okay, thanks.
Ciao.
Okay, thanks, Andrea, for sharing that. I think the key point here is that rather than just using optimization to determine the best range of values for a parameter and accepting that at face value, Andrea is actually using the optimization process and the results from that to get a deeper understanding of the market and market behaviors. And by doing this, he gains some additional insights that he can leverage that perhaps other traders may not have if they don't go to that level and really think about what the optimization results are saying. The approach has worked really well for Andrea to look at optimization from that angle, so it could be something for us to keep in mind for the future too. Now, as I mentioned towards the end of the chat, I have managed to get a link for the masterclass that we were talking about, and you can find that on the show notes page at bettersystemtrader.com/74. Now, I was speaking to Kevin Davey about the workshop a few days ago, and they've already filled up more than half the class, and they've only just opened it, so it's filling up really quick. I'm not sure how many seats I have left right now or today. It's probably not that many. So there is a hard limit on the numbers. If you're interested, you better move fast. I went last year and it was incredible. So I'd hate for you to miss out on it. Also, there is an early bird discount. Now, I don't recall what the date is. It's coming up really soon. Actually, depending on when you listen to this, you may have already missed it. Sorry, but I don't know when that date is, so you'll have to go to the website and check it out. But if you can get in before that expires, you can save a chunk of cash, so go take a look. Once again, the link is on the show notes page at bettersystemtrader.com/74. Anyway, that's it for this episode. I hope you enjoy the rest of your week. Have a great weekend, and I'll catch you next week. Bye.